And 72% of the time the market goes up. And the answer came to me. And that's what I developed my chart. The answer came to me is because, just like Caterpillar, when they pull their money out, you get out. Whoa.
It's your daily dose of how to manage your money. And now it's time for Phil's Gang on the Off the Wall Street Network.
Oh, God. Are you nuts?
With your host, Phil Grande.
Welcome to my podcast. So, a lot of things have been happening in this market in the sense of AI. The four most powerful stocks that has tremendous liquidity in the AI, those are the chip machine makers, those companies that make the machines and sell to companies to produce chips. Now, they have been doing fantastic. In 8 months, they're up about 240% in 8 months. Think about that. But at some point, there's going to be a lot of profit taking. We started to see that yesterday. And the day before yesterday, all of a sudden we saw the market pull back. And when that market pulled back on those four stocks, everybody got frightened. And here's what I said about that. Okay. What's happened today, there was a big pullback on these stocks. But it's nothing to get worried about because it was computerized selling. These institutions, the big institutions, okay, they have these big computer programs that kick in. And it's just a profit taking that's going on. That's all. So there's nothing to get worried about. And so the market pulled back, and then yesterday it went right back up before the close, gained all the losses back. This morning, pre-market, the same thing happened. Pre-market, the market dropped again on those four stocks. And that's why I keep telling you, don't buy on dips when there's no QE. That's why about 70 to 90% of people who buy dips right now are getting crushed. Because remember, just like what happened yesterday with these four stocks, when they pulled back last night, everybody started to jump in before the market closed, buying on the dip, but there's no QE. And this morning, they're all excited, the market opens, and what happens pre-market? They lost money. They came right back down. QE makes sure that doesn't happen. When you have QE, that would not happen this morning. You would not have lost those gains this morning. So when the market dropped on those four stocks yesterday, when you have QE, the Fed buys treasuries, yields go down. That's when you come in and buy, because that's a guarantee. When Treasury buys yields, it will push that stock up, and those stocks would have held. They wouldn't have gotten sold off this morning. So everybody who bought on the dip yesterday lost money because they don't understand. You don't buy on dips when you have absence of QE. So that's what's going on. And the reason we're getting this, down, then back up, and then down this morning, then back up again, is because these stocks are so liquid. It's unbelievable. You know those four stocks, each one of them in liquidity during the day have 250 billion? 250 billion. So the big boys can come in and buy whatever they want and don't disturb the stock price. Try to do that with McDonald's, the price would go through the moon. You wouldn't want that, okay, because it disrupts the whole market. So what's going on is that we're hitting a patch now where there is these computers that the institutions have cell programs in them. And that's what happened yesterday and today, these cell programs. So yesterday when they went down 5-6% because there was a cell program already in the computers, the institutions. And what will trigger those cell programs, for example, oil. Okay, oil prices Or yields coming down, oil coming down. They'll trigger that, and that's what happened yesterday. So are the stocks weak? Do we have to worry about them? No, of course not. The stocks are very strong, and we'll get into that a little bit later. But first, I want you to listen to the comments they're making, the jibber jabbers on TV about small businesses doing well.
We look at the consumer spending. We talked about it, money in their accounts, credit quality good, equity in their home strong, a lot of good fundamental things. That's going to come down to labor and wage growth. If you look at small businesses, they're doing a pretty good job of earning money.
Earning money, yeah, they're doing a great job. Historic bankruptcies up somewhat over like 64% in 12 months, actually 67% in 12 months. And he's saying how great small businesses are doing? That's a lie. They're lying to us again. Are you kidding? Small businesses are getting crushed. I mean, because the consumer's getting crushed. That's the problem. And Wall Street keeps ignoring every warning. Every warning. They do the same thing with the stock market. They ignore every warning. So that's why you got to follow the institutional money when you're a trader, and you got to follow what the institutions follow as warning signals. Now, the warning signals they've been using for 40 years that they will identify will take the market down, or it will at least have a correction in the market, is the credit spreads. Now, the credit spreads you want at plus 90. You know what they are right now? Minus 77. The yield curve is extremely important because the yield curve, that's the one that you need at 150, plus 150. That means the big institutions will dump their bonds, come in and buy crazy, like crazy. But when you're at minus 44, they're not going to come into this market. They're buying bonds. You got to be at 150. So just the credit spread alone, where we should be at 90 right now, or minus 77, just the fact that the yield curve, we should be at 150, we're at minus 44. And here's another thing. Oil. When we hit oil between 100 and 112, market didn't pull back at all. Failed to pull back. We have exploding deficits. Doesn't matter. Nobody cares. The market doesn't pull back. So that's a big problem because you've got to have corrections in the market to correct these valuations, to correct prices. They're insane. And what happens is when you keep on getting this kind of activity, all the money will flow to where the liquidity is. Remember, the AI has been doing so well because there's 1.2 trillion in liquidity. You take the four stocks, the chip machine makers, just those four, as I said a moment ago, they have 250 billion in liquidity during a trading day. You can't find another stock that does that. Take the 700 stocks, you can't find it. Now, small businesses, they said, oh, things are good? Are you kidding? 46% of all U.S. workers are employed by small businesses. Well, if small business bankruptcies are up 67% and 46% of all the U.S. workers are employed by small businesses, that's not good. 62% of all jobs come from small businesses. They're the first to hire small business, and they're the first to dump. This is terrible. So when small businesses start breaking down, the labor market in this country breaks down. That's the problem. So when you hear Trump say this, play what he's been saying lately of late.
We had the best economy in the history of our country in my first term, and we're blowing it out now. We're blowing it away now.
Blowing it away now. How can you blow it away when we have an increase of 67% in businesses, business foreclosures, business bankruptcies? You can't have a good, a strong economy because remember, small businesses is our labor market. Not GE, not Google, not Apple. Those aren't our labor market. It's the small business that you go down the street to buy some orange juice or some papers on a Sunday morning. Those guys, they're the ones that, they're the backbone of our country. It's the local economy. Small businesses, they drive spending. They drive the local tax revenue. They drive the local labor revenue, the hiring. And when you have one carpenter that you hire, you're going to build a house, and the contractor hires one carpenter, you know that creates 5 other jobs in your community? So when Trump says that this is the best economy ever, he's got a big headwind. That's a brave statement when you really take a look at the facts. I mean, small businesses are everything. And the problem is, like, the market, Wall Street ignores all these signals that tell you the market's in trouble. And do you realize this market, because we don't get a correction, do you know when we were at 4.75% the yields, we didn't correct, we didn't budge? That's dangerous. That means now for us to get a correction in this market, to get a warning, yields have to hit 5%. Can you imagine that? 5%. It was 4.5 before. Now you got to go to 5%. Oil's got to hit $100. This is insane. To hit that 5%, we need to correct it. Boy, do we need a correction. We need a correction. So I don't know how we're going to get to 5%. I mean, if oil goes up to 110, you also have to get another QT, not QE, QT. None of that's going to happen, so we're not going to get to that 5%. So what they're probably going to do is start another QE. They'll start printing money, just like they did in 2008, to push the market up without business investment. See, that's the problem. When businesses go sour, the backbone of the economy, backbone of the United States, backbone of our labor market, when they go south, the first thing the stock market does, the first thing the Fed does, they'll go and start QE. They start, again, printing billions and billions, and they start buying treasuries to drop those yields right back down so that you get interest rates near zero again. But it doesn't help anybody. It only helps the top 1%. Doesn't help Main Street. So the stock market right now, again, it's going to be very hard to bring this market down. Now, everybody says, well, that's great news. No. Take a look at some of the stocks that are trading at $1,000. 2 years ago, these stocks were trading at $35. So what happens, you keep pushing more and more people out of the market. It's like the ski areas. The ski areas, that was middle class. There's no more middle class skiing at these ski areas. You got to pay $100 for a ticket for one person. Can you imagine what it costs to go take your family to Vail or Aspen or wherever overnight in a hotel and a travel? What's going to cost you? It's going to be $15,000 just to go skiing on a weekend. See, this is the problem when the business doesn't correct. This is the problem with Wall Street. Okay, keeps pushing this garbage that we're the strongest economy ever. We have great earnings. No, small businesses are telling us the truth. Yields tell us the truth. And what the economy's doing, tell us when the crash will occur. IWM, the small mid-cap stocks, will confirm it. And small businesses tell us the truth about how the backbone of our economy, small businesses, are doing. And right now, are you kidding? So what the big companies do, to mask how bad things are, they do stock buybacks. That masks everything. So what do? Follow the institutional money and follow those warnings. They've been working for 40 years. They'll never let you down. We'll show you how to do it. philsgang.com. Thank you for listening. See you tomorrow, same place, same time. philsgang.com.